Hey everybody, welcome to the Bullish Rippers YouTube channel. We post all the recordings of the Rippers Twitter Spaces to this page. So, if you ever miss the Twitter Spaces, this is the place to come and check. Make sure you're subscribed and hit that like button if you enjoy.
Hey, dude, as we get started and as you get the tweet out and everything, you want me to roll through a couple news stories, let some more people's flow in and
Yeah,
speakers and everything?
yeah, for sure. I'm gonna get that tweet out now.
Perfect. All right, so a couple news stories that I'm looking at. I know we go over this went over this earlier this morning on Good Morning FinTwit, so I'll try and keep the stories a little bit different. On that Good Morning space, I talked about Uber and how they were introducing a temporary surcharge to help drivers pay for surging gas prices. Well, Lyft is following in their suit and doing that as well. That's in the U.S. and Canada. For Uber, I'm not sure about Lyft, but they announced that as well, following in their suit. Another interesting little tidbit of information, not as much news, but SARK, SARK, is now trading at a higher dollar price than ARKK. So that's the first time that happened to crossover. It actually happened on Friday. It closed out at the first time Friday, and now we're trading at it today, and it looks like it's going to hold with ARK down pretty significantly today. I think it was like 5% or something like that. I haven't checked in a second. Actually, I have it open. It's down about 5% today. Moving on, we got Nikola, ticker NKLA, one of your favorite wolf. I always know that. They are asking shareholder approval to add up to 200 million common shares to add in quote unquote tray production and finish building the Arizona plant. That's according to Electrek. There's a consortium of private equity firms, including Elliott Management, that was reportedly interested in acquiring Nielsen Holdings. NLSN is the ticker. They do a lot of the TV ratings and a bunch of other information-based stuff. But the rumored price is around $15 billion, and that's out of the Wall Street Journal. I'll go through one or two more headlines. We actually do have a couple that kind of began circling around. Apple, they announced their iOS 15.4 update. This one will let you unlock your iPhone with a mask on. So if only that was here a little bit ago, but that's what happened today. And then last story, I'm going to start with Peloton. Been struggling a lot recently, and this is not going to be a positive story, but I don't think it's the worst thing. It's reevaluation. But Peloton announced their New York and London studios will be closed March 20th to March 22nd, and there will be no live classes while that takes place, as the company plans to pause and reflect. So that was from Kilo Buddy. So I guess that's the shortening for Peloton these days. But I think that's a decent coverage of a couple of the stories. I covered a bunch of the rest of them this morning, and I will throw it back to you, Wolf.
Perfect. Okay, I'm seeing a couple of people I was able to get up here. Matt, I see you in the audience. I wasn't able to bring you up for some reason. If you're having any trouble, just feel free to DM, preferably the Wolf account. I'll see it there. Or you could DM Stock Market News on the Bullish Rippers account. I'm ready to get into it. Today's been, you look at the sentiment, and it's pretty easy to see the rug continues to fall. Now, SPY's trying to make its patented Bullish Rippers Power Hour upwards move here. We know it's trying, so we'll have to see if we end up, making that. But right now we are below that 420 level. A lot of people point to that as, for shits and giggles, that's kind of where it opened. Kind of where it was flat today, and now it is where it is. We had that run up in the morning towards 11 a.m. and then just that abrupt reversal. Really, a lot of people are calling that 425 level. If we do not break that 425 level, look for the reversal. Have reversed. Now just reversing on the bottom. A couple of people were like messaging me about SPY puts around like 2-ish. I was just like, at this point in the day with low volume, with uncertainty, with FOMC, I'm not personally coming in because the scary thing with this market is it's a freaking rubber band. And the next thing you know, it flies the other way tomorrow. So I will, with that, kind of bring in our panel and talk with our panel a little bit about what they think is going on in this market and how they're approaching it, because I think that there's a lot of different ways to approach it. There's not just one way that's correct. You could completely sit this out. You could do straddles. You can roll with puts. You can try to find sectors that have high volume and liquidity and move into them with potential, quick long plays. Or if you're a long-term investor, there can just be buy and hold and just continue to add to positions. So a lot of ways to go about it. Don't want to, kind of give too much of my end before we get into some of these speakers, because I know they all have different perspectives. So let's go into it. All right, TSDR, excited we got you on this one. Would love to hear from you a little bit about how you've been approaching this market today.
Hey everybody, how's it going? Thanks for having me up here. I stopped trading at about 11:30. I took a few losses today. I've been pretty good the past couple weeks about not getting chopped up and sticking with my position. But this morning, for the first time in a little bit in a few weeks, we saw a decent trend in the beginning. I mean, for about 2 hours, hour and a half, the market looked fairly strong intraday. We opened up relatively flat on the S&P, and I had some good technical patterns on the 5-minute chart. Breaking out of this flag pattern here. In the first about 25 minutes, and then continuing on upward up to that 424.50 level. And then things quickly reversed. Anyways, I was with that being said, like I said, SPY was going up and showing some bullish signs intraday, but a lot of the stocks underneath that I like to trade were showing weakness. So most of my trades that I took were to the short side. And I ended up getting chopped out of a few of them. And looking back, I'm pretty disappointed just today that I, quite frankly, I over position sized some of these and wasn't able to sit through, a little bit of chop that I normally would be able to sit through. And kind of let the trend set for me. And then the trend eventually did set, and we saw some nice shreds to the downside. I think it's pretty common or at least it was common this week, going through that Sunday watch list, that there was a lot of things that stood out to me. My watch list was too large this morning because there was a lot of stocks that were ready to go. I had about 36 stocks I was watching to the short side, and about 24 stocks I was watching to the long side. And that's far too many. And life in general, with the kids, I wasn't able to get to the desk early enough to really break that down as low as I would have wanted it to, down to about 10 to 12 stocks. I was only able to work on that for a little bit, so that's part of the reason why I had some difficulties today. But in general, what I was talking about with some people last night is looking back the past month and a half or so, you can kind of define SPY's range for a couple weeks in just these boxes that it's been trading in. And right now we're kind of in that box between 415 and roughly 430s, and I think I'm not sure if we're going to continue to bounce around between 415 and 430, but we'll have to see where that next kind of short-term range develops. Looking back, the week prior we were between 430 and about 427, 428-ish, and so on and so forth. You can just kind of split it up into those different boxes, and we are continuing to trend to the downside now at the lower part of this range. We're still seeing significant underlying weakness in many of these names that I like to trade. I mean, especially some of these China stocks that were down 20% to start the day. They saw a nice bounce at the open. I was able to get a nice move in Billy to the upside, and it's since given back a lot of those gains. But you know, I overall I'm sad because I didn't trade as good as I thought. Of these kind of trend days, to the downside are my bread and butter. I can usually do really well on days like this. But that first hour and a half of uptrend kind of got me a little bit shaky. But going forward, and it's so much uncertainty. We see the VIX pricing in that uncertainty. I think we'll probably see some short covering possibly tomorrow or early Wednesday into the Fed, and then we'll see what happens after that. It's anyone's guess how the market reacts after that, but just still a lot of uncertainty and really playing it day by day. But there's still, significant weakness in a lot of underlying stocks.
So right now, when you're typically doing your scalps, I know that this morning you probably scalped a couple long. Let's say going into tomorrow, feeling off where we are right now, do you feel like you're going to come out leaning more short?
So it really depends on if we, gap up or gap down. I was really hoping that we'd open up, 0.5%, 0.8% up, because then it would have been a no-brainer short any pop for the whole day, pretty much, or for at least the first couple hours. After being, wait, hold on, let me pull it back up here. After day two of the move, if we gap down, below 415 tomorrow, it'll make it really tricky to just short, right away for the first couple hours. We'll likely, it'll be more of an easier play to probably come back and fill that gap, assuming we close like right here at 417.50. Let's say we gap down near 414, 415. The easier play for me will be probably to fill that gap first and then look to refade it throughout the day. But if we open flat, it'll really be just kind of an individual stock kind of game, to where I'll be looking likely to find my stocks with good daily setups, and by good daily setups I mean on day one or day two of if we're looking to the short side, lower low continuation, or lower high continuation as well, or take some stocks from green to red, which is one of my setups. So for me, it really depends on how we open in the morning. I love flat opens because you can really play it both ways, and you can have that list of longs and shorts and really hit both of them. Today, it didn't work out for me very well, because I guess that I didn't jump on the trend soon enough, and ended up getting chopped out. I'm not sure if that answers your question, though.
No, I think that definitely makes sense. For sure. Okay. So the rest of this week, everyone I know has their eye on FOMC and other stuff. So we're just taking it slow, small position sizing. Any quick takeaways for retail before we move on to Brad?
Be careful. So FOMC is at 2 p.m. Eastern time on Wednesday, 1 p.m. Central time, my time. But we'll see a very choppy reaction for that first half an hour until Powell comes out and talks. So really, the trend for the last couple hours of trading after FOMC will be set between in that first 10 to 15 minutes of Powell talking. So we're looking at about 2:45 Eastern time. 2:30 to 2:45 Eastern time. So don't, and I'll say it again, and I'll probably repeat it multiple times throughout till Wednesday, that there's often this is going to sound confusing, but there's often a fade the fade, or multiple shakeouts. It might spike up and then all of a sudden quickly reverse in that half an hour between Powell, and then all of a sudden we might see that shakeout reverse. So it's like double shakeout type thing often happens intraday on these FOMC days. So just be very mindful of that. You might be thinking you're on the trend, and then it quickly reverses. So just be very nimble. I personally will not be holding anything going into those. Whatever trades I'm in, I will either take profits or cut losses going into that. Be very wary. IV and will be significantly elevated, I believe, going into it. And often the market doesn't respond how you think it may. So don't have a specific bias. Let the price action be the judge, and hop on what the price action is telling you.
Perfect. Really good stuff, TSC. I appreciate you being on here. I'm going to come back around, just getting everybody's opinions in. Anybody in the meantime, you can be sure to check out TSDR's profile for more information on what he's trading and his style. All right, we're going to pop it over to Brad in just a second because we haven't heard from you yet today. While we're doing that, I want to remind everyone, and I'll repin this up top, we are currently running a giant tournament for March Madness, but this is a asset-based tournament rather than college basketball teams. It is stocks, ETFs, cryptos, and so much more. NFTs are in there. We have not opened the bracket yet to be filled out, but in the meantime, we do have a website up, and there's literally just a place where you can put in an email, and if you put it in, you're automatically entered into a $1,000 raffle announced next week. Right now, we have a little bit over 200 people have signed up, so your odds are pretty good, to be honest. If you're trying to make an extra $1,000, you can do it while you're in this space. It's pretty easy to do. It's literally just the last pin tweet that is on up there. So if anybody wants to check that out, pretty easy to put in. And then brackets are going to open next week. We're going to have a $10,000 grand prize and a bunch of other prizes for people that are participating. All right, Brad, we're popping it over to you. Another, down day in the market. I'm curious to hear if you've made any additions, if you're looking at any earnings for this week, and just whatever else is going on with you, because I know we're only getting you at the beginning of the week, so I want to maximize it.
Yeah. Focused on Vegas on Wednesday and watching the more important March Madness tournament with. No, I'm kidding. This one's definitely more important than that. But Michigan basketball did make the field of 64, and I'm really excited to watch them play. But on a much more important and much more serious note, and not to sound insensitive to the shitty climate that we're dealing with in growth stock land, I'm just continuing to run the plan. Just very, very slow nibbles, very slow accumulation into companies that are now trading at PEG ratios, so price to earnings price to earnings multiple divided by growth, sub 1, which in any environment, forget the fact that they're growing revenue 30% year over year and expanding margins, so cash flow and earnings growth is even more brisk. But in any environment, a PEG ratio sub 1 is pretty darn compelling. Just go back through market history and you will see the exact same thing very concretely. So it sucks right now. I'm in growth stock land, but I mean, it's for me, it's just continuing to focus on these companies that are showing me great results, that are fulfilling their promises, and that are showing signs that they're able to efficiently and sustainably grow over the long term without solely just pouring more and more and more cash into the business. So I put out a list of companies a few days ago, 17 out of 24 in my portfolio that I see as kind of meeting that bill or fitting that bill, and there's 7 others that I don't. And one of those was Tattooed Chef, which I actually exited this morning. So sorry. Yeah, sorry. I still love their food. I will still be a customer, and yeah, their food rocks. But the management team, I mean, hopefully no one's on it on this spaces from the management team. I'm sure there's not. But there's just been one too many blunders and dramatic press releases on adding net losses to this quarter because we forgot a tax provision, and sharply lowering guidance because of supply chain issues that are only intensifying. So kind of took this opportunity to exit when there weren't. I mean, I was still green on the position, so it did underperform benchmarks during the holding period, but so there was no alpha, but there were still positive returns, and just taking those returns and putting it into companies that I'm more confident deserve the capital and will continue to deserve the capital seemed like the right decision to me. Just looking at, I know fertilizer charts and all that are down today, but Tattoo Chef grows a lot of their own food, and they do so in Europe. So compound that with the fact that their management team is not super capable. Not to sound mean, but just looking at the last several quarters and the blunders that they've had. These supply chain issues, you have to be the elite management teams will survive and thrive through this, but the non-elite management teams will not. And the issues are only getting more difficult for Tattooed Chef. And I don't really see them as a leadership team. Again, not to sound mean, that is capable of overcoming all of this. I was trying to give them more time and more patience to see if a macroeconomic backdrop that wasn't so harsh to them could kind of allow them to right the ship and survive, because the brand is gaining a lot of traction in retail, but these macroeconomic issues are not going anywhere. And I don't really see over the next several quarters this turning around. So if we get to a point in time where it looks like Tattooed Chef has righted the shift or righted the ship, sorry, or they're shifting towards righting the ship. Not to sound weird, but if that happens and they inflect to profitability and the brand equity remains building and unaided brand awareness remains building, and management ideally hires an external CFO that actually has real experience and yeah, real experience leading a public company, so that we stop dealing with these minor blunders on the income statement seemingly every single quarter now. I would consider getting back in, but there's a lot for them to prove at this point in time, and I'm just less confident than I have been in the past that they're going to be able to prove it. And then I look across the portfolio at a CrowdStrike, at an Upstart, at a Revolve Group, at a Progeny, at these thriving companies that yes, some of them are expensive, but CrowdStrike trades at 100 times EBITDA because EBITDA is more than doubling year over year. I mean, that's why it has an EBITDA multiple like that, and free cash flow margins of 35% are why it has an elevated sales multiple, in rapid free cash flow growth. So it's focusing on these companies that are again, not to sound redundant, but doing the things that I need them to be doing to be confident that they're going to continue compounding top and bottom line over the very long term. And when I look at Tattooed Chef and then I look at some of the other companies in my portfolio, the confidence levels are just much, much higher at this point that some of these other firms can do so. So that was the rationale. I'm happy to talk more later on in the call, but that was kind of an essay. So I want to pass it over to you guys to get to the rest of our very talented speakers.
Yeah, I think, first off, congrats on getting out of Tattooed Chef. Makes me feel better for selling my position a little bit back. And I hear you about the opportunities in the market and the waiting. I'm curious, Brad, I know that you have your portfolio of the high-flying growth names, and the amount of research you do into them is very credible. Do you also regularly add or have dollar cost averaging into any classic ETFs or index funds?
That will absolutely. So thank you for asking that, because that absolutely will be the plan for me at some point. I'm 24 years old. I have no children. I have very little financial responsibility at this point in time, which is why I feel and I have no debt. I've paid off student loans. Pat myself on the back for that, but that's irrelevant. But what is important is the fact that I don't have a lot of external responsibility to deal with, which is why I feel comfortable allocating 100% of my investable funds into something like this. But when I have children, when I have a mortgage, when I have things like that, it is going to rapidly shift to 40, 50, 60% of my overall investable funds in SPY or in QQQ, and the remainder of that bucket continuing to invest the way that I invest right now. Just because, I mean, volatility is not only palatable for me right now, but it's exciting. It's something that I can be opportunistic about, just because of how nimble I am in terms of not having a lot of childcare bills or anything like that to worry about in the future. So for somebody listening to this and listening to me saying really good things about fund growth stocks, just know where I am in my financial wealth creation life. May call for a different approach than your circumstances currently call for. So yeah, and I also wanted to say, I am in accumulation mode for these thriving companies, but want to just reiterate one more time: it is slow accumulation mode, basis points of cash at a time. Not taking my 10.5% cash position and going to 8% tomorrow and then 6% the next day. It's going from 10.5% to 10.3% and 10.2%, and having people make fun of me on Twitter because I'm going so slowly, but that's how I'm going to do things, and that's how I'm going to continue to do things. So just wanted to get that point across as well, that it's not about going all in. It's about taking advantage of opportunity extremely slowly as it comes, but acknowledging that Mr. Market can make those opportunities look a lot better and a lot more irrational in the short term. So I will stop rambling and now pass it back over to you.
Yeah, great explanation, Brad. Really enjoyed that. Stock market news. Any questions or thoughts you want to come in with, or should we keep it moving?
Yeah, no, Brad, I've asked you a couple times this question thinking we were over the hump on earnings season, but somehow your stocks kept reporting. Are we finally done with earnings season for you? Feels like we're fully dead. We got one or two maybe this week that people care about, but yeah.
Yeah, I still have. So funny enough, CuriosityStream reports earnings on March 31st. So their first quarter ends the day that they report their fourth quarter. So they better have some deep insight into how that quarter went. And also along the lines of CuriosityStream, I just said I sold Tattooed Chef. If I look across my portfolio, the other two tiny positions that I'm kind of at the end of my rope with is CuriosityStream and also Nanox. Nanox is going to have an investor conference this week. If they kick the can down the road one more time on commercial production, I'm selling and cutting my losses. It's like 0.4% of my overall portfolio at this point in my time, or at this point in time. So it's tiny, but that's not a reason to hold on. And if they underwhelm again, I'm gone. In terms of earnings season, Air Wellness, one of the cannabis companies I own, reports this week, and then next week Cresco Labs, and then CuriosityStream, and then I'm finally done. So earnings season ends, and then the next one begins in about 10 days. So it's really earnings year at this point. It's not really earnings season, but we can still call it that.
Perfect. Good stuff, Brad. Appreciate it. Thanks for the question, Evan. All right, Big O, what are you looking at today? What have you traded?
Well, the whole market's just trash. Looking on the macro side, everything just beat down. Even a lot of the big names, the blue chip stocks are beat down. Amazon had a good move out of the gate today. Ended up gap filling, almost $120 move on that thing. Of course, SPY's beat down. It finally picked direction, and target on that thing's I'm sorry, I've been out here working in the yard, so it's going to hit about 410 on it. We got a lot of small stickers too, like PDD, the trade desk. Of course, he's mentioned Upstart. A lot of that stuff's all just beat down. I think a lot of the macros are beat down. They're at exhaustion risk right now. I say we probably see at least a few good days on it. If I had to guess, I'd say the market's going to gap up in the morning just to sell back off. You really have to play it day by day. There's not much things, as far as I go. I'm price action, but I'm not a big swinger right now. I might hold for a day or two or something like that, but it's just too dangerous. The only way you're going to swing something is you swing it to the downside. And also, if you're going to swing something, especially if you're long something, you got to hedge that thing. You can hedge it with VIX or you can hedge it with options, but you got to have some kind of safety net on that thing. But a lot of stuff just beat down. If you look, I think a lot of people they're just focused on the lower time frames, and they're forgetting about the month, week, quarter, and the year. And right now, you got it's a 2 up, 2 down on SPY, and a lot of stuff's like that. I mean, they're beat down. A lot of these tickets are like Roku, it's down $300 or $400. You got Etsy, Zoom, SESQ dying. It's a bloodbath out there. It's a bloodbath.
So anything that has been working for you? Any strategies?
Oh, absolutely. Yeah, so I use a special pivot study. What I'm doing is I'm waiting on the bounce of those, then a retest. All my answers come from consolidation breaks. I'm looking for that consolidation break on the 60. And I'm looking for the break retest. Like if you look at Amazon today or even SPY, it's consolidated on the 4 hour. As soon as it breaks that lowest wick in the range, you take it short and you're going to target pivot low. Pretty easy. The best reversals happen either way. When you come back through large candles, they're like a gap. And the reason they're like a gap is because the price action super clean coming back through there. And on top of that, you're running stops along the way. So the more stops you run, the faster it moves. And that's just like when I enter on a consolidation break, it's tested support, several times. So of course, that's where everybody's throwing their stops, right below support. So the good thing about taking on the lowest wick there, you run those stops immediately, it should go. On top of that, on that first pullback, if it pulls back, that level should act as a resistance level. So then you get to add to it when it crosses the prior candle's low. But deadly. I mean, look at Amazon. We played it 2 weeks ago on Thursday and Friday. It went $300 in 2 days. SE on Friday, if you look at that, it's got that consolidation. So it's a compound too. If you look on the day, you can see it, which is just a group of candles. They're just solid green with little to no wicks on it. Consolidates the top, bounces off the pivot, comes right back to the base. And that thing moved all day on Friday. So that's what I do is I just take consolidation breaks. There's, and the longer price consolidates, the bigger the break. And that's because the stop's sitting on the support resistance levels.
Okay.
But everything just beat. And again, the larger candles they're coming back through. The bigger they move to the downside. So consolidation break on the 15 would be bigger than a 5, and the consolidation break on a week would be a larger move than a consolidation break on the daily. But if anybody wants a scan, I made a FinFizz scan to find these tickers that are puking, and I'm happy to share my pivot study too. It's different. There's not another one out there like it, and it's like a magnet.
Yeah, definitely.
Price action.
You want to pin some of that up top, or if you have it posted? Yeah,
I posted it in my in the Twitter. I'm not sure how to pin it to this thing. I tried. I can't do it.
Here, let me try. Let's see.
Let me.
Here. Yeah, actually, some of your stuff isn't showing up on my end. Evan, maybe if you could take a look.
Yeah, if you want to just retweet that so it's at the top of your timeline, I can throw it right out on pinning up the spaces.
Cool. Awesome, Big O. Anything else you want to put in here real quick, or are we going to start?
Be careful out there. Like I said, tomorrow I think SPY pushes up. People take profits on it. I think it's going to gap up in the morning and end up selling back off. So remember, in an uptrend, there's red days. Just like in a downtrend, there's green days. So just because you start seeing green don't mean it's over with. You know what I'm saying? When the week and the month and the quarter and the year's down, I mean, stuff's in trouble. Stuff's trouble, and you got to go with the larger trend, right? So before I think the bottom's in, I want to see price at least 25% from the base on the weekly. I want it breaking support or resistance. I want it to become support, right? So that's the only way I'll call a bottom is when I see that stuff happening. Until then, I just go to flow.
Perfect. Awesome, Big O. Appreciate you being on here. All right, let's bring it over to yourself, Matt.
All right, so let's chat about the market. I posted a couple of posts up at the top. You guys can take a look at them. I mean, right out the door, the market was completely set up to be bearish. All setups were bearish. The S&P, the NASDAQ, everything did not look good. And there were certain stocks that just dropped and kept dropping. Today we had, there was news about China, and there's a bunch of threats that we may have severe. I was reading something. White House says there'll be significant consequences for China if it provides assistance that violates sanctions. So there's a lot of fear in the market going on about what's going on in the world right now. And if you go look at the post I made kind of supporting that, right out the door, the one I wrote about the VXX, which, by the way, which has some news on that as well. But we watched that. It's an easy way to gauge the risk of the market. And VIX clearly set up at this 25.5 level. And when it hit it, it pivoted and turned around, and it just ran and kept going. VIX had a 27 point, or VXX had a 27 resistance on monthlies, and it just screamed right through that and kept going. Typically on your VX futures, if you break a $2.50 run, which is the current band size called risk interval, the market just kind of becomes completely erratic and does not find a support and keeps falling. And that's what we saw today. A volatility event, it's like an elevator that's falling, and you jump up, and then you're kind of falling with, well, I guess you jump up and land on it, but it's that feeling that the floor keeps falling as the stock market's falling. The base keeps widening, or the volatility itself. So very thin market just fell. We did this hedging squeeze on S&P 422.5. It's the second one I posted. As soon as we broke that, it was game over. NASDAQ set up with a somewhat better setup in the morning, but still nothing was bullish. I did take a couple long scalps on a couple of stock plays. An options plays on a couple of tickers. Like I longed Walmart and I longed Pepsi today. Took some profit on those guys, but my longs at S&P, longs at NASDAQ just got out of those as they continue to fall. I don't know if I see this market continuing to sell from here, but I do see us filling the gap. Anytime you have a volatility event, the market will find the last buffer of buyers and sellers it can find, especially on the downside. Obviously, your buyers and sellers typically come at the largest buffer, or largest amount of them, at the close of the market day. And so clearly when the market has nowhere to go except for falling down, it's going to try to find the last place it saw buyers, which is usually that buy imbalance that kicks the market up, around a short squeeze, which we saw on Tuesday. So right now, S&P just fell down, filled its gap from Tuesday, and we're just kind of sitting there as volatility just kind of runs in the close. It's really hard to understand, I guess, the sentiment of the market right now, since this is, I guess, to say that this is more of a volatility thing than a straight up bearish thing. But we haven't seen any really good bull setups in a long time in the S&P. So I don't wake up every morning anticipating one. I look at it and then I get my hopes up, and then I just kind of say, okay, do I either short or sit out? But today we did get a potential squeeze that I did try to take an attempt on, but it didn't work out. So you just have to kind of watch. One of the tricks I tell people, if you are trading anything, you have to understand the effects the volatility has on the market. And volatility, if you ever go and dissect the VIX white paper, it's published by the CBOE. It's on the website. If you love calculus, go for it. I'll break it down for you in 2 easy sentences. VIX is the measure of the amount of wobble the market has when the price is not going anywhere and deltas are the same in a fixed time. So literally the market stays flat. That's how much the price goes up and down to find buyers and sellers. Higher volatility has to span a larger range. Or if the range is the same, VIX also includes time. So it's longer to find a buyer and seller at the same price. So either way, when you look at that equation, it tells you that the market has the ability to fall really quick to find buyers. But as the VIX is going up, that's going to price itself in all kinds of things like assets and options because of arbitrage. VIX created the move today. Volatility was driving the boat right at about 11 a.m. Eastern. And so what that does is you can think like the bid and ask price of any asset inside the SPY. Think of options. They're going to get wider, right? The spreads are going to get wider. The market becomes less liquid, less participants. And all of a sudden, somebody starts selling to bid. It doesn't take a lot to move the market down. The more illiquid the market is, the more volatile, the less volume it actually takes to move it down. Today's volume is absolutely low relative to what we've seen in previous days, like the last Tuesday, where you had a choppy market that sold off. We were hitting sometimes 10 to 20 million shares of SPY on the hour, whereas we're between 5 and 10 on the hour. This is a very, very, very low volume sell-off, which accompanies a volatility event. The fear of China and all that other stuff is just causing the market to fall. So a rapid widening of the range. That's what volatility is. And once VIX just carries itself away and creates a squeeze, the market, it's almost like it's like you're in your room and then the ceiling starts raising and the floor starts falling all at the same time. So, the market's falling to find the floor, but the floor is obviously moving faster than the market's falling. So any selling just pushes it lower. And that's what you see. And we call them volatility events. The market did push, suggestively bullish. Suggestively squeezish when S&P broke 423. That was a very decent sign, but it obviously couldn't survive volatility because any selling just kicked it back down. So we have to take it a day at a time. I know that's a cliche to say that as a trader, but you really do. TSDR said it great. You wake up, you have to find what happens in the opening of the market. There's so many catalysts that take place, especially with global conflict taking place at a time when you were sleeping. You're going to wake up to rapid shifts in sentiment. Futures are going to go all over the place sometimes. And so it's not really wise to try to bet on any resolution or any kind of, problem fixed overnight. It's a day trader's market. It really is. It's get a position, get out. My scalps in the morning are probably an hour, if that, at most. And just trying to, cherry pick what I think looks good. I have a system I use, and I just, I have a scanner pull stocks, and I grab them and I trade the options on them, and that's it. But I'm not necessarily buying stuff to accumulate for longer term runs. As long as volatility is driving the market's going to be more sensitive to any kind of bad news, and it's going to move a lot more violently like we saw today. So even with that, we also have FOMC coming up. And coming through my news wires today, I think FOMC Fed swaps are now pricing in 7 standard hikes for 2022. We're probably getting a rate hike every other month, right? So that news is coming out. And really, as TSDR also said, there is a trick to trading the Fed. It's you don't trade in the first 30 minutes when that announcement comes out. Exactly the way he said it, because nothing really changes until that moment when Jay Powell gets up and starts talking. And that's when you start to see the market really move. The first 5 to 15 minutes when that announcement comes up, market just spans a small volatility range and usually comes back to where it started. The next 15 minutes, you see a bigger move. And then at the 30-minute mark, you start to see a ridiculously big move. So FOMC days typically move in 3 different stages. But the really kind of dynamic part of that comes when the narrative is created for the next go-around. So while we do know rate hikes are coming, we've clearly priced them in, and volatility is accompanying the uncertainty in the equities market because as we're seeing, people are abandoning equities and going into commodities. It's the hot thing to trade right now, and that's why volatility is present in the equities market's more sensitive. And so what does that all say about Fed, right? Well, what do you think traders are going to do, right? Everyone wants to fight inflation right now, so they have to put their money somewhere. And as oil is cycling down and some of the other ones are pulling back, people might jump in and start buying the dip on that. And again, further selling equities to jump into commodities. I don't think we're going to get reversals in some of these inflated commodities. I think they're going to stay up there for a while. We've seen oil stay elevated for many years when conflict in large oil producing countries takes place. So I don't think that people are going to abandon the oil trade and rush back into equities anytime soon. But we need to see that volatility come back down, because other than that, you're going to have other days like this where your bull setup is going to have like a sheet of paper for the floor, and somebody's going to drop a rock right through it, and it's just going to fall and then fall until it finds a support. Now, tomorrow is going to be a key day because we don't have any near-term supports over the last couple months. I wouldn't consider the bottom from 3 Thursdays ago a support, which is about 410 on SPY, 4100 S&P. I think if we get close to that, we clear right through it and keep going. If there is a bottom, it needs to be today, or it's, Groundhog sees its shadow, and it's going to be probably a while from here. So I really don't know, and I don't think bottoms are going to come out of the idea that people are going to rush to equities yet. But I do think they do come from short squeezes around events like FOMC, CPI, or even monthly expiration, which you do have coming up on Friday. So it's not unusual to see people squeeze out going into those events just because they're taking profit on their shorts. So either way, when you are analyzing what causes a reversal, it's always started by a short squeeze, unless there's a negative event that gets reversed on news, and there's really not going to happen. The negative events or whatever is causing any kind of bearish sentiment is not going to reverse on any news. There's no news that'll reverse it, other than war is over tomorrow. And for whatever reason, that always doesn't happen overnight either. There's always still kind of process that leads to that. So these events, if there is going to be one, you won't see it coming. If there is a bottom, you won't see it coming. You'll just see a bear setup squeeze bullish, just like today, market squeeze bearish. So be careful, go into those events flat, go into those events without trying to gamble on the outcome, and really just understand how to determine the difference between a bull and bear market or a bull and bear setup for the day. And then when you squeeze to the bull setup, which is what I always do, I go in flat and I get the confirmation. It pushes to what I call the bull side of the market when I do my calcs. And then I jump in once I'm convinced the market is bullish. I don't try to catch the bottom and hope it becomes bullish. I really want that confirmation, especially if I'm trying to ride like a 1 to 2 day swing. So this week's gonna be very volatile. We have VIX futures closing above 32. That's not necessarily a good sign. 31 and a quarter was really kind of like this key point we needed to resist for the market to stabilize. So it's anybody's ball game tonight. So it's going to be very dangerous stuff. And the longs I took today, I just had some really good hedging setups. I took a long on Walmart right out the door. That was a great play. And then I took a long on Pepsi. So those are my two that I did that were good. They just came up on the scanner. They were squeezing higher, and I just grabbed a quick day trade on them. But nothing's really looking great. I mean, I know today we were watching like Nike fall and Apple fall, and just everything was just really getting hammered today. And that's just volatility, right? There's really not a lot of support. So we need to find something that squeezes some shorts out, and it could be Wednesday. So we'll see. But always remember, whenever Fed FOMC meetings happen, or the announcement meetings, the day before, there's usually an event as people get out of the way of that. So if there's a lot of people believing there's volatility and the market's going to get crazy, shorts might decide to cover today and tonight and tomorrow throughout the evening just to get out of the way of the FOMC. So sometimes those Tuesdays you see really quick reversals as well, just on market kind of finding a middle for that event. So we'll see how that plays out. Do you have any questions for me further?
Yeah. So one question, and I think it'll be quick because I think you just kind of mentioned it there at the end, but I also want to get Danny involved before we get too close to market close. And that is, what's going to quiet this volatility?
It all depends. I think that right now the reason that the volatility went the way that it did was we have all three of our signals were bullish on VXX, which is an ETN that we monitor. Which, by the way, there's a Barclays, if you guys monitor ETNs, just made an announcement that they're suspending new share issues of ETN of the ETN VXX because of issuance capacity. So there's a fear also in that particular instrument that could have caused it to push even higher. If you guys understand, ETNs are unsecured debt obligations. There's I'm gonna get their whole speech about what those are, but they have if they don't have the ability to provide liquidity for them, the price of them can completely collapse on the secondary market and make them illiquid, and they'll detach from the instrument they're supposed to follow. And there's a problem with that. So a lot of today's VIX activity could have been related to that announcement, as well as Barclays is, the issuer of ETN. So, and that could be a big deal. That statement they stated on their website, it might not have anything to do with Russia and Ukraine, but I mean, it's very coincidental that they're worrying about liquidity problems in their own instruments. So my team right now is kind of digging further into that to have a better answer. I'll maybe make some posts on it later, but that is one effect that could be causing the VIX to show up extremely bullish itself today. VXX was a very rare setup, which was all things bullish and hedging higher, which you'd only really see that if the market was just definitively bearish, not if the market was in the middle and then crashes through. So the VIX created the event today. It wasn't the other way around. The volatility wasn't responding to the market. Volatility created today's movement. So another thing for what I also think is just the idea that possible China involvement, which could bring U.S. involvement. If China gets an idea to support Russia, and then we further sanction China, and then China invades Taiwan, and we draw into the war. I mean, there's all kinds of chain reactions that people are afraid of. So anytime you hear the idea that another country gets involved or anything like that, you're going to see assets shuffle around, and things will just be volatile. The market needs a day to adjust to that news. It's not really news; it's just a speculation. But after today, I think we'll have to see further development of it. I think further mentions of it won't really create more volatility. But the idea that it's possible just kind of shifted some assets around. I think people just decided to prep for a big news week on top of that, and that just created a volatility event. Market, when our calculations are based on the close of yesterday's options landscape, so this was decided yesterday. Friday. So market closed with this kind of volatility in preparation for today. So that would make me not think to completely attribute it to the news about China. I really just think it has a lot to do with FOMC and just people over hedging the equities positions they have with VIX instruments going into a weekend, because in this kind of environment, 3 days is a lot of blackout time for you to not be able to get out of your products that you're in. So I think that would just be it, and I think that volatility might settle out tonight. As long as we close below 31.99 on VIX futures is a key level. That if we close below it right now, then I think we should be okay. That's that band limit that we talk about. Anything below there, it's just a standard volatility event. If we kept going, I would be a little concerned. So right now, I'm not too concerned. SPY might bottom out today, and we might see reversal tomorrow. So you'll have to just see it. Yeah, but that's really it. I mean, it's kind of hard to say. Volatility is such a weird instrument. It's always hard to say why people get into it. Usually another thing people get into volatility would be because of solvency issues. You have a large position that you want to hold on to, and you need to hedge very quickly. You don't want to necessarily hedge on direction. You don't want to pay the premium on puts. You might go in there and buy some kind of volatility instrument just to make sure that if the market squeezes X% against you, you don't get squeezed out of your position. So VIX is often used as a hedge against something, and that very well could be it. And just seeing behind the veil of who would be so aggressively bullish on the VIX, it's really hard to say and why. It's one of the hardest things to understand, the position side of it. So
awesome, Matt. Appreciate the explanation there. Yeah, definitely. The VIX is a wild and wacky world. Okay, Danny, appreciate the patience. We have 10 minutes left here in the market, so if there's anything that you are looking to potentially buy, although I don't think that we're swinging, so probably more closing out positions at this point, would love to hear it. Plus, just any other takes on how you look at the rest of the week following today in the market.
Yeah, a lot of noise out there right now, especially with China. I think eyes are getting drawn away from Ukraine and now looking at China for two reasons. Number one, potential involvement in what's going on in Ukraine. But number two, overnight getting some news out of Shenzhen that they're closing factories. So how does that affect supply chain in the coming weeks and months, depending on how long this gets shut down? And then, of course, new variant dubbed Deltacron detected in Europe. So I think that's why we're seeing that really big spike in mRNA and PFE today. Now they're coming out and saying that we're more than likely going to need a fourth dose, a second booster later this year. So it's just adding more fuel to the proverbial fire that's already burning and raging across the world right now. So yeah, I think honestly, just my personal opinion, the longer the war in Ukraine goes on, the more likely we're going to get drawn into a proxy war with China and Russia. That's not good. We're obviously already supplying arms and I'm sure money to the Ukraine. History tells us that the longer this goes on, the more we're going to get drawn in. So enough about that. Let's talk about the market. So looking at SPY and the Qs, we've definitely waterfalled into this close. We're trying to hold on to these key levels. I think I had mentioned earlier today on the earlier space, 317.66 is what I'm watching on the Qs. 3:15:11 is what I'm watching on SPY. I think, if we lose those levels, it's hard to say where the bottom is going to be. I think 410, very realistic in the near term before FOMC is possible on SPY. And I think the Qs, I've been posting charts. You can just check my feed for them. 310, which is right at about the COVID low anchored VWAP for the Qs. That's where I would be looking. The COVID low for SPY is around 379. So I do have a 1618 extension, 397.63 to the downside on SPY. And we're getting a death cross. We're getting that 50 on the daily chart crossing under the 200. So the market obviously is picking a direction. The direction is down. What that means for FOMC, I think, is anybody's guess. I thought Peter had a well timed statement earlier. All these mainstream media people talking about the move is priced in, which he calls BS, and I think that's right. I think you just don't know how the market is going to react to anything that the Fed puts out at this point, whether it's the quarter point, the half point. Doesn't matter. The market is going to do what the market is going to do. We're seeing we thought that COVID was, this black swan event that, we've never seen before. And now you tag on supply chain. Now you tag on Ukraine war. Now you can tag on things going on in China. I mean, it's just one thing after another. And the market just can't catch their breath. So anything can happen in this market. Anything can happen. And I think you have to be ultimately one of the clearest things that you need to do is to manage risk. Yes, you could take quick day trades, but ultimately that's even difficult. Looking at flow, VXX has had a steady stream of 30 calls coming in from 2:58 p.m. Eastern to 3:13 Eastern. We're seeing large orders for the 30s. I just saw in the last 15 minutes 53 strike sweeps coming in, golden sweeps on $53 and $58 calls on VXX. So it's going to be very interesting from now until Wednesday. I think, have 5 minutes till the close, so I'll wrap it up really quickly. But I think we're going to see a lot of more of the same. I think you see a lot of volatility. One thing to keep in mind, every single pop is getting sold, whether it's on SPY, the Qs. The only name that really looked to me that I was watching held up pretty well today was Zim, because even mRNA gave back most of its gains. I think it was upwards of 20%. Now it's up around 7 or 8%. So nothing is safe in this environment, to keep it short.
Yeah, crazy. Really, it does seem that way that you said right there. Nothing is safe at all. And in a world where nothing's safe, Danny, you're not swinging pretty much at all right now, right?
No, sir. It's quick day trades, scalps, but swing trading, I think, is I'd much rather preserve my mental capital for when the market is acting somewhat rational, because I don't think it really has acted any rational at all in the last couple of years. But yeah, I'm just really preserving mental capital here. I think we've been on Spaces for months now talking about waiting for this FOMC. It's finally here. Hopefully we get some kind of clarity after Wednesday and return to the normal unnormal, if you can call it that, until the next meeting, which I think is in either June or July. So I think that's what everybody's kind of been waiting for. Everybody's holding their breath, patiently waiting for whatever is going to happen, and then we deal with everything else after.
Yeah, that definitely makes sense to me. Danny, any one or two names that stick out to you here as potentially forming bottoms?
No, forming bottoms, I would say I'm not even really looking at that.
Looking for the uptrends?
Yeah, I'm looking for the uptrends. I'm always looking for the relative strength. You can never figure out where the bottom is. You got to wait for the overall indexes to bottom. You got to wait for the Qs and the SPY to settle down before you can even think about it. Now, the one thing I will say, there were two names. It was Shopify and CMG, Chipotle, that had pretty clear positive divergences on RSI. Chipotle keeps on getting rejected off the 50 SMA. It's 2 days in a row, Friday and Monday. So those are the only two names that I saw. Oh, that's interesting. But, these positive divergence plays, they can resolve themselves in time. So it's not a definitive, reversal signal, although it does pique my interest. It does get me interested, but I'm not necessarily buying, or even at that, for that matter, dollar cost averaging at this point. I still see a lot of weakness in this market, and I don't mind to miss the bottom by, 5, 7, 10%. I'd rather catch the market back on the upswing than try and time bottoms here.
Yeah, that definitely makes sense. And so any like, what would you say is the number one industry or sector industry that's just staying on your radar right now?
Well, I think oil and gas has to be for on the forefront, just based on what's been happening. But I think even that is a bit extended. I think commodities and metals are definitely something that needs to be watched. We've seen some strength in aluminum, in copper. Obviously, gold continues to move higher. It's going to be the non-sexy names. It's going to be the names that, not a lot of people have been watching over the last 2 years. We're seeing a much longer, much bigger rotation into safety because of what's going on between COVID and Ukraine and supply chain. It's like a perfect storm, so to speak. I think that's the best way to put it. We're seeing a perfect storm of anything that can go wrong is going wrong, and we've never seen these events coincide at the same time. So it's really difficult to say what's going to happen moving forward. I think you just have to continue to watch and observe the market, look for those quick relative strength plays, take your money off the table, and wait and see for the next rotation.
Perfect. Well said, Danny. Looks like there's a lot of people agreeing with you on the panel and the crowd. All right, Evan, we just came up to 1 hour here. I know that we don't care too much for the earnings that are today. So now that we kind of move past this hour point, do we want to talk about, same question that we just kind of threw to Danny, opportunities moving forward, just some sectors we're looking at? Feels like we have a pretty good feel on where we are in the market. Are there any other things for after hours that you want to touch on?
Quickly, we do have one or two earnings. Vail Resorts, ticker MTN, Coupa, D-Local, GitLab. Not too many that a lot of people care about, but, some companies in there that people watch. So I would love to I can interject in when I see some of the numbers. I think that's a great question to continue. Wolf, Gav is nice enough to be hosting a lot of these spaces from the Bullish Rippers account, but he's on the Wolf spaces all day, every day. So if you enjoy these spaces, make sure you're checking out Wolf and Bullish Rippers. But my point here is that you are the expert at this. You know what you're doing. You're the king of this. And I'm excited to and always down to defer to you on the questions and where we're going with the spaces. But I will definitely interject when I see some of these numbers cross.
Sounds good. Yeah, definitely let us know when you see the numbers cross. And Evan's definitely right there. I do get to do 2 spaces a week on the Bullish Rippers account. Evan does a bunch of them. This account's been running. If anybody hasn't already checked it out, look at some of the tweets on this account. It's been getting great engagement. We've been enjoying, building this up, doing a lot of spaces from it. We do power hours, long-term investing, and industry specific. So we're doing the oil and gas industry actually this week. So Danny, you'll be on that one. That'll be on Wednesday evening. I think Matt as well. And so something to look forward to there as we dive into that. But yeah, thank you to everybody that in the meantime has been following this. Once we get this count to 20K, we'll do a nice giveaway of something with monetary value is what I assume. So keep checking it out. And
wait. Normally Wolf just spits these out and puts them onto me. We actually are planning this one. So 20K, We are doing a big giveaway or some giveaway stuff. We definitely got merch, stickers, other cool stuff going out. Definitely I can actually support this one, or not support. I support all of them. Get in front of it. Oh my God! Hey Wolf, guess what I'm looking at right now?
What are you looking?
Benzinga just published an article talking about Wolf Financial's March Madness Finance Tournament, which kicks off with a $10,000 prize.
Wow! What do you know? Oh my! Look at that!
Hey, I genuinely did just cross. For anyone wondering, I am looking at I'm looking at Benzinga Pro, and it's going right there. What'd you say?
I don't think it's even on their Twitter yet.
No, I see it in the Benzinga Pro panel right here.
Wow, look at that. Making it to Benzinga Pro. But I didn't even know it was coming out today. Well, I knew that we did it. I didn't know they were going to get out today. Shout out Benzinga. Yeah, again, for anyone that hasn't already, pinned tweet is in the top. You can go ahead and sign up right now. We have a giant March Madness, but Market Madness spinoff tournament. $10,000 grand prize. Other prizes completely free to play. A lot of your favorite investors and creators on this platform have picked the assets that are going to be in it. And right now, you can enter into a $1,000 raffle and basically just get a head start to keep in the loop just by going to the website. It's marketmadness.co and just throwing in an email. That's all you have to do. But yeah, shout out Benzinga for showing some love to that. We're definitely going to continue to pump out. We actually have a bunch more press that's going to come out next week about this. I think Market Watch is writing an article, and multiple others, the NYC Times and a few others are writing about this. So we'll definitely be getting those articles out, Tech Times, and more. So be on the lookout for the things that are coming there. All right. My favorite thing to talk about is opportunities. So I think we'll probably do like opportunities mixed with closing and marks. Sometimes there's more back and forth in the spaces. I think this was a great space to give everybody an opportunity on the stage to really just, lay into it. If people want to talk on specific topics, they're always obviously very welcome to. And if they ever need to come back in or bounce off someone, we all know that raise hand feature. But definitely enjoyed the way this one went. And looking forward to seeing Benzinga tagging me in that article. That'll be a good time too. All right. Let's throw it on over to TSDR to kick us off here. So closing remarks. And then in those closing remarks, I'd love to focus on opportunities for the rest of this week. Where should people maybe be looking towards? Obviously, they should do their own due diligence, but never hurts to ideate together.
Yeah, absolutely. Thank you. So, things that were on my watch list for today and for the rest of this week, I'm going to say a few names that haven't quite fallen. So, there's always this fine line, when we're in a market like this, bear market trading, to where, you can identify relative strength. But when they're in, speculative sectors, with high multiples, it's kind of hard to distinguish relative strength versus still has room to fall, right? So that's always, a fine line, especially like, for example, when you're, sympathy trading. Let's just, use China stocks, for example. If the majority of these Chinese stocks are down, let's say 6-7%, you find one that, or a couple of them that are down only 2%, it's hard to distinguish. Is it, lack of relative weakness or lack of weakness, or is it, do they have room to fall? Anyways, that leads me into some of these, software and cybersecurity companies that have held up fairly well, likely because of the headlines the past, month or so with the cybersecurity hacks across the world, potentially propping them up and keeping them from fading with, other sectors. So one of the top ones on my list today were Zscaler, Cloudflare, Net, and Fortinet. Net has obviously, fallen significantly, but FTNT, Fortinet, hasn't. And, the look on the daily chart here is a pretty nice bear flag, or bearish pennant, you might want to call it. No, yeah, bear flag. I always call everything a bear flag if it's a bearish pennant or not, but this is a bear flag. Anyways, we broke down that today and have since recovered, pretty well off the lows. We had lows around 265, closed about 275. But I think this one, if this sector ends up cracking and we get below around 263-ish, I think this one definitely has some significant room to fall if we continue trading the way we are. I'd eye around that, probably 213 level. If, like I said, if we continue to roll over. Crowd obviously has held up fairly well after their earnings. Started to roll over a little bit today after putting in an inside day on Friday. It's kind of stuck right above this little moving average sandwich with the 9 EMA, 20 SMA, and 50 SMA, all kind of smashed right in there at about 180, 182-ish. So we'll see how this reacts in the coming days, see if it comes back and fills the gap down to about 171. I'll definitely be watching that. Zscaler has fallen significantly, but this thing is great to trade. It has a $17 ATR, ATR, if you haven't heard me talk about it before, is average true range. It's the amount a stock moves typically on average from low to high on any given day. And it's a $190 stock that moves $17 a day. So, on a 10-day average, you can get about a 10% move if you catch the lows and sell the highs. But I usually try to look to, and you guys kind of talked about that. Oh, go ahead, stock market news. You can all just interrupt me.
Quickly. Okay, awesome. Yeah, I'll just quickly jump in. Coupa Software, COUP. They just reported earnings. EPS was 19 cents, beat on expectations of 5 cents. And then revenue was 193.3 million, beating expectations of 185.7 million. And the stock was down about 19.5% in after hours trading. So Coupa
You know what the
Software is
guide?
getting
Do you know what the
destroyed.
guide looks like? I don't really follow that one, but is it guide related?
I didn't see the estimates for the guide, but I do see next quarter they expect revenue to come in between 189 to 191 million. So I can get the guide for that in a second. But I did see Vail Resorts, which was probably the most popular, the one that dropped. Ooh, that now it is gone. Of course, my thing is lagging the second I go. There we go. We're back. I apologize. And Vail Resorts. EPS was $5.47, which was a miss on expectations of $5.70. And then revenue was 906.36 million, which was a miss on expectations of 960.24 million. And then just really quickly, Vail Resorts is moving lower, 8.2% in after hours trading. But yeah, back to you, TSDR.
Back to you, guy or Dan, whatever guy Adami always says. I love when he says that on Trading Spaces. Anywho, so yeah, I'm watching Fortinet in the coming days. Not too extended yet, and I'm, not too crazy extended. We got the moving averages curling down, 200-day moving average still, moving up to flattening. Like I said, I think if we can get this, below 264, I think we see about probably another 20% down move in this. Crowd.
TSDR, I do think your mic is a little bit glitchy or going in and out. It's not terrible, but I don't know if it was like a Wi-Fi thing or something. Is it just me?
No, it's going in and out a little bit.
It's yeah.
I just turned off my Wi-Fi and got to my 5G. Is that better by chance?
It's like a tiny bit glitchy, but I could hear what you're saying.
All right, I'll finish up here. So I'm watching that sector here. Another interesting stock that I had on my watch list today was CRISPR, CRSP. Well, this thing trades fairly closely with Beam Therapeutics, BEAM, and NTLA, IntelliTherapeutics, both of which have continued to roll over significantly, while CRISPR has held up fairly well. It popped into the 50-day moving average, put in a little inverted hammer, and I was looking for some continuation to the downside today. I think if we going forward, I think we can probably see some continuation to the downside, get this thing closer to $50 in the coming weeks, which would be about 13 to 15% move lower. CRISPR I'm watching. I'm kind of disappointed in the solars the past couple days. They ended up having a little bit of a failed breakout on the TAN ETF and are starting to roll over. Now, again, brings up the question, is this lack of relative strength or do they have room to roll over with the rest of the market? It's just an interesting question, something to keep your eye on if weakness continues to broaden out and when we see some of these solars roll and the TAN ETF roll back over down into the low 60s. Continue to watch some oil and gas stocks. It won't be a quick, sharp end to the cycle. It'll likely continue for a little bit longer here. A lot of these stocks are just working off their overbought conditions, pulling back into the 9 period exponential moving average. I like Chevron, I like Oxy, I like Exxon. Exxon's pulling into the 20-day moving average. So continue to watch those. And another one in the cybersecurity area, PanW, again, has held up pretty well, still above its 200-day moving average. Hasn't fully tested it exactly. Like I said, is it lack of relative, or is it lack of relative strength, or is it do they have room to roll over still? So just kind of begs those questions to where I think if you're looking to continue to fade a lot of these stocks, these could be a sector with.
Hey, the audio is just it's really bad.
Yeah.
All right, I'm done. Thank you, guys.
All right, appreciate it, man.
What you had to
I know.
say was really good, and it's frustrating because the audio is bad, but love what you had to say for a good consolation prize.
Yeah, it's definitely spaces and audio is crazy, but really appreciate you being on here, TSR. We'll have you back on another one of these soon. Brad, want to go next?
Yeah, just quickly on Coupa, and I want to preface this with saying I don't know the company well enough, like I do with my own holdings, to know if this is related to some weird tax event or conservative guidance or whatever. But it does look like the next year, calendar 2022, fiscal 23 guide on the top line is about 5% light, and then on the bottom line they guided to 17 cents, and we're supposed to do 73. So a little bit underwhelming, but again, EPS is one of the most manipulated. Manipulated lines on it for accounting and financial statements. So it really could be provision for tax benefits or something like that. So for bulls, you'd have to read in more. But on the top line, on the surface, it does not look fantastic, unfortunately. So sorry to say that, but yeah.
Okay, so any other opportunities you see?
For me personally, it's really just not to sound boring or redundant, but same thing I've been doing for the last several weeks. There's a cohort of about 17 companies in my portfolio that I see as financially thriving and doing all the things they need to do from an operational perspective and also reasonably priced. Talk about that PEG ratio. For hypergrowth companies, I like to use EBITDA multiples divided by EBITDA growth, but ideally it's earnings multiples divided by earnings growth, and most of them are around 1, which is pretty compelling to me. So it's really just respecting the fact that we don't know where the bottom is, and there's a lot of scary shit going on in the world, and a lot of stuff that companies can't control and have zero way of combating. Now, some of them actually, no, I shouldn't say that, have zero way of being immune to. A lot of them can do things to combat these issues, but immunity is pretty hard to come by. And so just considering that and all the fear we have in markets right now, and just respecting the fact that things could go lower, things could get more irrational, and I want to have more cash on the sidelines to be adding to these 17 companies that I'm excited to own as of right now for the long term. So that's where I'm at, 10.5% cash, 10.3% cash, sorry. And we'll just continue to slowly deploy. Nanox, Curiosity Stream are the two smallest positions I have, and they might be getting the axe soon if they don't show me something in the next few weeks for their earnings calls and their investor conferences. So that would add about 2% more to the cash position, and will really just frustratingly slowly to a lot of people continue accumulating and doing so at a snail's pace. So I'm not going to be around for the rest of the week. So have a great week, everybody. I will be popping my head in, and if stuff gets really shitty and really terrible, I'll send out something and try to, for lack of a better term, hold hands. But I'm in this with fellow growth investors. I tweeted out something along those lines earlier today. Shitty year for 2022, but really all that does for these companies that are going to prove themselves capable of compounding at a brisk clip, top and bottom line over the long term. All that's doing is winding up the spring for future returns down the line. And I'm slowly deploying cash for whenever that comes, which I do not know when that will come, which is why, again, I'm going so slow at a frustratingly slow pace when carrying out this process. So thanks for having me. Always fun to talk about stuff, and always fun to listen to other smart people talk about how they do things differently. And have a great week, everybody. I'll be a little less involved than I normally am, and back in full swing on Monday.
Okay, man. Enjoy the rest of your week. Hopefully you have a great time. We'll definitely miss you. And it's hard to replace a guy like Brad, but we'll struggle for a week and then we'll have you back. All right. Big O, any closing remarks plus opportunities that you see in the market?
Yeah, so well, I would say be careful out there because the market just tore up. I think it mentions something about oil. Saw a little bit money rolling in the banks early this morning. Of course, it sold back off. So metals but a lot of the money that went in there is extended on the daily and the weekly. So it's just straight up is due for a pullback, and we see that. Like X, we played it last week. The week before, we played a pullback to the top side too, and now it's starting to sell back off. So there's really nothing safe. And then we saw this morning where the market began to make lower highs and higher lows. So it basically was making a symmetrical triangle, which is just a doji on the day, till it finally broke out of that and sold off. I may swing some calls overnight for SPY. That's about it. Cash is a position. I know that's kind of lame to say, but it's the truth. Just be careful out there. If you're gonna trade, make sure you're putting a hard stop on there and take profits often. And this choppy market too, you may want to reduce size. You may want to sit on your hands. You may want to do nothing. As far as SPY goes, it's basically indicator of the whole market. It's picked direction. It's going down. That 410 level is key. Also, we mentioned a little bit about Ukraine and Russia and all that stuff, China. The market's been selling off before that stuff even happened, like big time. You look at Roku, SQSE, and Etsy, they've been dying for a long time. I think it's just now coming to a head. We haven't seen nothing yet. I think you got to remember the psychology and stuff too. When these position holders and people are holding these stocks and stuff like that, they get scared and they can only lose so much money before they start selling. And then you have people come in, they start shorting it. It just brings it down faster and faster and faster. And that's what we see. We see the volume starting to pick up on the monthly candles. It's not going to slow down anytime soon. But again, it's extended to the downside too. So just because we start seeing a few days of green, it's not the bottom. So don't go buying calls thinking or picking a position up because it's not there just yet. I don't see money flowing into anything in particular. It might flow in there for a day or two, and then it's right back out. I just don't think anything's safe. I really don't. I really don't. I would just be so careful out there. If you're an option trader, the market's bearish. I mean, it's, if you're going to take something, look at, wait till it pulls back up on the daily and then take and short it back down. So, but SPY, that 14 level is key. So just keep it on that. That's all I can say. But just be careful. It's choppy. I think we said that last week, and here we are, and the market's down another week, and I think I said it 2 weeks ago, and it's down, and it just keeps going down and down. It's dangerous.
Yeah, it just seems to keep going in that direction. So absolutely.
Oh yeah.
Better.
Yes, I'll say something else.
Yeah.
About Tesla. Tesla's on a downtrend too. Tesla's. I'm going to say it on here. Tesla's $700 by Friday. There you go.
Well, hopefully not, but let's see what happens.
It's going there. Yeah, because it's a 2 down the week. It's a break retest on the month. It's bounced off a pivot to the downside. It tried to take it back up, and that support level became resistance. And it's in trouble, man. Now it's coming down a huge green candle on the monthly. And I tell you what, Bitcoin's the same setup. So if you like crypto or Bitcoin and you're long, and you got it at the top, you may want to think about taking some money out. Is it a major downtrend too? Candles don't lie.
Words of warning. Here we go. All right.
Yes, sir. I'm telling you. Everything I said has come true for the last year, and I'm spot on, man. Like, I'm spot on. I'm at least got an 85% success rate in everything. And that's from over 2 years, man, of calling shit. Like, it's, it's backed up. I record my sessions every day. It's everything can be backed up that I say. It's real. It's the real stuff, man.
Hey, man, I like the spiciness. We keep it.
Yeah.
We gotta have difference of opinions and people telling us things are going up. People telling us things are going down.
Yeah.
Putting their mouth.
Well, me, I don't care about news. I don't care about mergers. I don't care about earnings. I don't care about none of that stuff. Just what the candles tell me. That's it.
Love it, Big O. Anything else you want to put out here?
Yeah, I don't mean any kind of disrespect by it. Like I said, there's different opinions. I mean, I respect everybody, technical traders, position holders, swing traders. I mean, there's a lot of intelligent stuff out there. A lot of your guys on there, man, super smart guys. I mean, they know their stuff, hands down. But it's just like rubbing elbows, like everybody's got their own opinion. But I respect them 100%. You know what I'm saying? So I don't want to be, I'm not trying to be mean or anything like that, I promise.
Awesome.
So I respect everybody on here.
Taking it as a diss to them, I think, you're just stating your opinion,
Yeah, and that's all it is. I mean, everybody has one, So
I hear.
very excited.
Awesome, man. Well, appreciate you being on.
You're welcome. I appreciate you having me. Y'all have a great day.
Absolutely. Danny, any closing thoughts?
Yeah, liked what Big O had to say. I mean, I'm pretty much in the same perspective. I'm pure technicals on my side. And talking about Tesla, yeah, we retesting that 1382 extension to the downside. It's coming down, possibly back down to 700. I totally agree with that. You could just check my thread. I have that. I've had that target zone for a couple of months now. But yeah, I think there's just to keep it brief and keep it straightforward. There's 5 names that I see as showing relative strength and bucking the trend and not necessarily paying attention to what's going on. These are mostly names that we've been talking about. 2 names that I'll bring out. Maybe I haven't mentioned publicly yet, but I have behind closed doors. So AbbVie, something that we've been talking about, Gav, for quite some time, had that cup and handle breakout on December 6th. It's gone nothing but up. Have 2 entries in. My second entry was over 138. We are showing a little bit of negative divergence on RSI, but we also showed that right before that second breakout. So I'm going to keep a close eye on it, but it's coming up to that 2618 extension at 154.20, currently at 152. Actually broke out today, new 52-week high. So I would say that's relative strength. Next up, name that I haven't really talked about that much is DE. That's Deere and Company. I did put a trade idea out on 313 for a close over $400. We had a spinning top today. Came pretty close to 400, got rejected. So for me, that just solidifies that that's a key level that I'm going to be watching. We did have a golden cross back on the 25th of January, and no squeezes to note. RSI is in good shape, got plenty of room to run. 422 will be my first target on that break of 400. New name, haven't really spoken about. FMC, FMC Corporation. It's a pure chemical crop play. Another higher close today. We'll close at 126.03. Put out a trade entry over 119.61. First target's going to be 132.07. Fourth name on my list is X. This is U.S. Steel. Had a second entry over 30.57. We did lose that entry for one day. Came right back up and retested the first target at 33.92. We put it in not really a favorable candle today, but we did get the golden cross on Friday. So just a little consolidation under the second attempt to break that first target of 33.92. So going to watch this over the next couple of days. And just to note, we do have earnings coming up on the 25th. And last but not least is ticker ZIM. This is ZIM Integrated Shipping Services. This one's been looking really strong after breaking its wedge. We retested the wedge, broke back out, took 67.62, consolidated within my second target, which is 74.53. Broke that on Thursday last week. Continuation Friday, continuation today. Closed right on top of my 200% extension, which was my third target at 82.25. So if we get a daily close over 82.25 this week, then my next target's going to be 94 and then $100. You take a look at these names, they're not doing what everything else is doing. You focus on the relative strength, you can trade in this market. You just have to exercise proper risk management, make sure you're taking profits, make sure you're keeping a tighter stop loss, and make sure you're moving your stop losses up along the way as the trade progresses. Is what you got to do. Is it easy? No, it's definitely hard. And it's frustrating too because you're seeing a lot of intraday volatility. But if you zoom out, take that bird's eye view, it is possible. But like I said, if you're not well equipped for this market, like Big O said, sit on the sidelines. You don't have to trade. There's plenty of trading days throughout the year. You don't have to force trades when the market is hard. Wait for the market to get easier. It will get easier. It's never going to be easy, but it will get easier. That's all I really got to say, Gav. Appreciate you, of course, having me on, number 2 for today. And look forward to my Tuesday Spaces tomorrow.
Love it. Thank you so much, Danny. I'm looking forward to them as well. And certainly, they're going to be interesting as we see people have to make stock picks, and some of them have to make bullish stock picks in a market like this. So we'll see if people go shorters or not. All right, Matt, coming to you. Any other opportunities you see in this market, and any other thoughts?
Yeah, I've actually been running my scanner, listening while Danny was chatting, and looking and seeing there's really nothing that structured itself looking short-term bullish as of today. So the only plays that I had that actually looked pretty decent were Pepsi, Walmart, and IBM. Those are two that I looked at that had decent setups. I think I had AXP, which is also structured to be pretty good. They're almost similar. The charts kind of look the same. They have this kind of setup. It's like the most bullish thing that we can find. I really see many things on here that are giving me hope for picking, but tomorrow morning I think it's going to be different. We had a great close on the VIX. This is very promising. My team is doing a little more research into finding out, trying to see what's going on with Barclays, why they would be suspending new issuance of VXX, and usually because of liquidity problems on secondary market. They don't want to market make and bag hold their own instrument. If you guys remember, what was it? Not TVIX. There was one of them back in the day that collapsed, one of those volatility ETNs, and it just fell to zero. And I think, there's a fear of lack of liquidity in some markets like that. So if we did have an event where that happened, that would be a nice little squeeze for the index. But I think we ruled out the idea that had anything to do with today's move, by the way. And it's only a temporary suspension of issuance of the new shares. So there wasn't a big change there. But anyways, back to the picking target. With that being said, VIX closed in a very promising below 32 VIX futures. That's kind of the level we wanted to see. And I think that that's okay for the market to stabilize. We will see immediately when the market opens, in futures tonight will probably be the most important market open we've had in a month, because it will start to dictate how the rest of the globe is going to absorb this news about China and U.S. possible involvement in the war. If futures open and just start selling, it can start a really bad chain reaction going into FOMC. If I were to take a guess, I think the market squeezes tomorrow and squeezes Wednesday going to FOMC, as long as overnight in Asian and European markets relatively mild to the China news. So right out the door, I make a post every night about kind of like the futures market setup. If we start to see squeezing in futures, clearly it's worth taking a note of. But other than that, I think retail might have a good day tomorrow. Walmart, like I said, has been one of my favorites for the last week. Still watching it. It was my winner today. I'm still watching it for tomorrow. I think there's a lot of promise there. A couple more stocks that I think look good. Oh, I just lost my list here. Oxy was good. Oxy, I had that on my list. It has a very, very large, wide range, and of course can be subject to the volatility in oil, which we probably could see oil squeeze back up again. So I think oil plays in this environment might be a nice little squeeze play to go long on for a short period of time, not to rally it, but at least to kind of stabilize and revert to the mean of the downtrend we've recently had. And that's probably it for tomorrow, but we'll have to see. We went from 130 to about 100. I think 100 is a nice psychological number. Oil futures might trade back up to maybe 110 to 115 range. I think we're there. Could be a couple of good long scalps and some oil plays. ExxonMobil came on the radar today, but I didn't take it. But yeah, so I think that's going to be good. I think Apple actually hit a nice little bottom as well. I think Apple, to me, is going to be a gauge for tomorrow. It kind of fell to like a key level of 150. That was my target support for Apple. And the target support I have for SPY is not much farther off from here. S&P and NASDAQ, let me give you guys some numbers really quick if you're jotting them down. And I'll close out here my speech. I think NASDAQ futures, 12,954. So literally right at about 13,000 a little bit. Or sorry, 12,954. Not farther below 13,000. There's a really critical support on NASDAQ that's close to about a 41.30, give or take, on ES futures. And I think tonight we'll see if we break through that. But I think that we have the ability to possibly very short-term reverse if the market has a mild response to China. So not reverse in a longer sense, but squeeze into FOMC, which is very, very common, that we want to be crashing before that event, because you don't usually want unusual volatility for an event that can already have volatility. Markets can become illiquid and pretty much crash under their own weight in that environment. So market makers like to squeeze people out leading up in those events. So just be careful for a quick 1 to 2 day reversal tomorrow. So we'll see in the morning.
Yep. The famous last words, we'll see in the morning. And yeah, I'm excited to see how that plays out. I'm sure there'll be some people live on Spaces nice and early. We'll be doing technical analysis with Trend Spider and friends at 12, as we always do. One more time. Again, my name is Guy Blacksburg. I run the Wolf account, which I see kind of got booted off here. It might have been a Wi-Fi thing. I am lucky to be able to do multiple spaces a week from the Bullish Rippers account. We are working our best to get this account to 20K. Stock Market News, my co-host, does all the tweets from this account. So if you've already checked it out, it's a great follow if you're on one of us. You should probably check this one out. Number 2, we have a tournament going on currently. There are tweets up top. You can see Zinga just wrote a full article on this. We have a $10,000 grand prize. We have a $1,000 raffle running right now. We have several other $1,000 budget for giveaways. Going to be one participating in. There's 60 plus different accounts from FinTwit that have picked the assets that are competing in this tournament. And all you have to do is go to marketmadness.co on any broker, and you will be able to pull it up and sign up on the tournament waitlist. And that will automatically enter you to a $1,000 raffle with pretty good odds. So recommend checking that out. Stock market news. Before we close up here, any other closing thoughts, remarks, opportunities you want to put out there?
Yeah, dude, just want to give a big shout out to all the speakers who came on here and made this such a fantastic space. Love having all of them on. Excited to have more of them on in the future. Thank you to Wolf Financial again. Another account. I know he said his account had to drop off. Maybe he's in the background sprinting to get it right back up right now. But big shout out to Gav, Wolf Financial, for helping us put together the space, and Rippers, Bullish Rippers, the Green Raccoon that is the host of the space. Very awesome of this then to be bringing us all together. So love doing these spaces. Make sure you're following Bullish Rippers. We're doing a lot of really, really cool stuff from there, including these spaces. We have a newsletter. We have a bunch of tweets that go out. We're working on a TikTok. We're working on some other really, really cool projects that we're not quite ready to release today. But just a bunch of cool stuff going on at that Bullish Rippers account. So make sure you're checking it out, giving it a follow. That's not something we're just trying to do today or tomorrow. This is a long-term project and cool stuff for going. So, yeah, big shout out to that. And what other spaces do we have today, Wolf? I know we got a couple more. I know we got the 531 with Lex talking a little bit about real estate. And
that actually got postponed.
Okay. Boom. Look at that. 7 o'clock then? Or 7:30?
Yes, 7 p.m. So tonight, we did originally have a real estate space, but we're moving it to next week because we landed a pretty big guest. But they're coming on next week. So we're just going to do next Thursday. It'll be on schedule like usual. We're just going to take this week off. And tonight we still do have a space, 7 p.m. EST. The post is already up. I think that we should have probably pinned it a little bit back. It is going to be hosted from the Wolf account. It is going to be hosted by Stock Market News and Asset Dash. Asset Dash, fantastic app that we do a lot of different stuff with. We do asset pitching with Asset Dash every single Monday evening at 7 p.m. So you can come and you can hear pitches on stocks, crypto, and NFTs all in one space. I think we have one crypto pitch, one NFT pitch, and 3 stock pitches tonight, if I'm correct on that. So I'm pretty sure that's how the layout of it's going to be. We are also giving away a Little Lemon's Head NFT, which is a pretty popular page at 50,000 on Twitter. It sells for about $500 to $600 right now. Like floor price, obviously you could sell for more than floor if it's rare in your book and someone else's book. So you can check that out. That is going to be talked about tonight on the space. That's everything for now. Stock Market News, anything for you?
Interestingly enough, I'm actually going to be on the Asset Dash account again tonight for the spaces. So we'll be talking to you from there. Excited and smile and wave.
Sounds good. Smile and wave. All right. Take care, everybody. Have a good rest of your day. We'll see you in about 2.5 hours.